In this video, I want to talk about mental errors, what mental errors we as humans make, we as traders make. I want to talk about how to identify them, and then I want to talk about how to fix them. With that being said, let's start with the mental errors. So the first mental error we're going to talk about is confirmation bias. So confirmation bias is basically whenever you hypothetically, let's say, go long or short on a trade, you only look for pieces of information that support your thesis, that supports your direction, that supports your idea. So we as humans, we have this tendency that whenever we want to do anything, be it trading or not trading related, we will only seek information that once again supports what we are looking for. Now, that is a very, very big problem for us traders, because if we keep letting this happen within trades, especially if we are going long or we are going short or whatever direction you're taking the trade in, and you're unable to recognize the cons of the trade or the downsides of the trade, it's very easy for you to get super optimistic. It's very easy for you to put on a lot of size and be wrong in the trade and not really be mentally ready for it just because you were overly optimistic and you only looked at the good side. If this is happening to you, this is what I would personally do. Every time you take on a trade, I would start trying to look at the negatives. I would start trying to look at the other side. So if you want to go long and your thesis makes sense of this trade should go long, start trying to look at the other side of the trade. So hey, I want to go long. Well, why would this not go up? Why would this trade not go in my direction? Start flipping that from a different perspective if this is a problem you're dealing with. FOMO, fear of missing out. I'm pretty sure you guys heard about this one, and I'm also pretty sure you guys have had your own set of problems, your own set of history with FOMO, right? FOMO is essentially where you have the fear of missing out on a trade, you have the fear of missing out on profits, you have a fear of getting left behind in a certain position, in a certain trade, whatever the case is. So we as traders, when we see a certain trade, we see a certain position, and it's going in the direction that we maybe predicted or thought it was going to go, we start feeling this feeling of like, oh man, I was so right on this trade. If I got in here, I could have made so much money. Why didn't I enter? Why didn't I take this trade? And that FOMO starts kicking in, right? And that FOMO tends to do what? It tends to lead us to taking bad trades, putting on bad size, and just completely losing control. I've had my fair share of times where I'm in front of my stock screen, I'm looking at the markets, I'm seeing what's going on, and as I'm seeing what's going on, certain names start just moving. Names that are maybe not even in my game plan, not even something I'm watching, but maybe I'm seeing people on Twitter talk about it. Maybe I'm seeing people that I trade with talk about it. I'm like, okay, I can't miss out on this. And I immediately take the trade. And most of the time, those trades just don't work out, especially if they are coming from a place of deep-rooted emotions, which will ultimately blindside you. Next one is revenge trading. Now, there's countless times in the past where I have revenge traded. I have taken trades because I was angry, because I lost money, because I missed out on opportunity, and I got really, really upset. So I wanted to make back my losses, or I wanted to make up for the profits I missed. Now, revenge trading is something that can completely destroy your trading account. It can blow up your trading account ultimately if you are not aware of your emotions, if you are not aware of how you're feeling, and you do not combat this in real time. So going back in my trading, there was a couple of times where, not a couple of times, a lot of times, especially in my early days, I have revenge traded. Now, the reason for me revenge trading was basically I would go into a position, right when I would go into a position, I would lose money. The moment I would lose, I would get angry, I would get upset. I'm like, why did I lose money? I shouldn't have lost money. The trade was going in my favor. I got stopped out too early, whatever the case is. And immediately I go into the second trade trying to make the loss back. Guys, the moment you feel like you need to make the loss back is the moment you need to get up, walk away from your trading screen, and just call it a day. Just call it a day. If you ever feel like you need to make back the money you lost and your emotions are taking over, just trust me, call it a day, close your screens, go out for a walk, and come back tomorrow to a new day. It just won't end well. That's me talking from experience, where I've had some of my biggest losing days, losing 20, 30,000 plus a day, because I was revenge trading, because I was trying to make up the money that I lost, because I was trying to make up for the profits I could have essentially made because of FOMO and things like that. So if you start feeling these emotions, you have to know how to deal with them, which we'll talk about in a bit. The next mental error that has cost me a lot of money is being overconfident, right? Now, confidence is key. Confidence is essential in our daily life, yes, but to a certain limit when it comes to trading. In trading, if you're overly confident, it could end up really, really bad with you. So there are times where right on the open, I would have a really, really strong open. I would make $20,000, maybe $30,000 in the first 15, 20 minutes. And immediately when I make that amount of money, the first thing that rings in my mind is, hey, if I put in more money, if I had risked more capital, I could have made more profits right away. Then what I typically do, or what I did, is I would carry that mindset over to the next trade. So trade one would go extremely well, followed my plan, had a solid risk amount, everything was perfect to the T. Now, because I got trade one right, I carry that confidence into my second trade, and it's not just normal confidence, it's a high level of confidence where I wish I had put more money so I could have made more. And the second trade is where I would typically just lose the profits, if not more, because I was like, well, I'm so good at this, I'm gonna make more, I have to just risk more. And that has hurt me countless times. There's times where I have been on weekly winning streaks, and after being on weekly winning streaks, I got so confident, I got so over to a point where I was like, well, I'm right, I'm gonna keep being right. Anything I touch, it just flows and I keep making money. If I'm unable to tame that, which I haven't been sometimes, I would be followed by a big losing day or a big losing week, which would take off half, if not all, my trading profits. So it's very important for you to be aware of these patterns. It's very important for you to understand these things about yourself. We all have different mental errors, mental blind spots that we're going to deal with, and it's our job to figure that out and understand them. For you to identify any sort of problems in your trading, the first thing you must be doing is you must be journaling, you must be tracking your data, and you must be understanding all your holes within your trading. If you are not journaling, if you are not tracking your trades, if you're not looking into these things, you won't be able to identify what is working, what is not working. You won't be able to identify where the weak spots in your trading are. So I would recommend starting tomorrow, you guys start journaling. Now, how would you journal or reflect to kind of get these data points? So the proper way to journal for these mistakes or for these mental errors is to do the following, which is what I did and which is how I discovered my problems. Before you have your trading day, one thing I would recommend you to do is I would recommend to have a written game plan of what your game plan is for the day. What are you looking to do? What names are you watching? What's your outlook on the market? And how and what you're going to trade in terms of risk size and so on. Now, once that is set, your job as a trader is to come back to that at the end of your trading session. So when you're done, go back to your trading session and look within your data, look within your trading journal and start seeing. Now, when I go back into my trading journal, I start seeing, well, the first trade was green, followed by 3 red trades. Okay, well, why were these 3 trades red? Was I wrong? Or was my confidence from the first trade, did that carry over to my next trade, and next trade? Or was it where I was right? I lost money, I should have called it a day, but because I lost money, I tried to make that back and I went into like this deep red rabbit hole, right? So it's me understanding that. So the way to do it, as I mentioned, is to look at your data visually, to have it tracked in one place. When you look at your data visually and you track it, go back to your pre-market game plan and start seeing, well, did I follow my plan? Good. Okay, now when I took trade 1, what happened when I took trade 1? What was my reasoning from a technical point? And what was how was I feeling emotionally? And these things have to be jotted down, guys. Like especially in the early days, you have to jot these things down to learn more about yourself, learn more about how you process things, learn more about how you react to the market and how you react to certain situations, which is very, very crucial if you want to be developed as a profitable trader. So I go back to some of these trades and I start going through my notes, which, as I mentioned, I start journaling and I start mentioning, and I see, well, okay, my first trade made sense. I had the proper risk. I was risking 2,000. I had this edge on my trade. Everything looked great. My second trade in the moment looked phenomenal. But when I go back to journal, I'm like, whoa. This does not make sense. This trade makes no sense at all. And I'm pretty sure if you guys, for the people that have done this, if you guys have done this, comment down below, let me know. And because I've done this a million times, right? When in the moment you take a trade, it's great. It looks perfect. You lose money or you make money, whatever the outcome is. When you go back to that trade in a couple of days or a couple of hours, you're like, whoa, what the hell did I do, right? And that's like the cool thing about trading, or interesting thing about trading, where you start realizing the person you are in front of the screen when you have real money on the line, you have real action happening, is a completely different person than the person you are when that pressure, the money isn't involved, all those things are kind of, to the sideline. You start seeing the markets from like a real point of view without the added pressure, without the emotions, without your mind playing tricks on you. And you go, wait, why did I take this trade? This trade makes no sense at all. But in the moment, it made so much sense to you, made a lot of sense to you. And you're like, well, it made sense then, it didn't make sense now. So where's the gap? How do I bridge the gap? How do I make myself from this point come to this point and fill in that gap of understanding of not allowing these certain emotions that are playing a role come into my trading? Now, when you start going through these trades individually, like I mentioned, you need to be writing down your thought process as well. Well, how did I feel when I took this trade? How did I feel as this trade moved? When this trade started going down to my stop loss, did I actually want to sell and hit my stop, or did I not want to hit my stop? Did I add more size because I thought the trade was a good idea, or did I add more size because I wanted to make more money? Those are two different things. Did I take this trade because I had a real edge, a real probability behind this trade, or did I take this trade to recoup my losses? Or did I take this trade because I was blinded by my confidence, or I saw other people taking on a trade and I wanted to follow, or I saw a trade just moving up and I had no game plan of it, I have no trade idea of it, nothing at all, and I just wanted to put on a trade? So these are questions you should be journaling. These are questions you should be asking yourself to go deeper on what are the reasons you start taking some trades. And if you want to take this game serious and you want to be in it for a really long period of time, you have to know the answers to these questions. So if you don't know the answers to these questions, in the next 6 months or maybe the next 3 months, if I was to ask you these questions, well, what are the biggest mental errors you have as a trader? What are the issues for you personally as a trader show up in your trading a lot? And how do you combat this? Which is the next thing I want to talk about, right? So first is understanding what the mental errors are. Second is identifying them within your trading. The third is fixing the problem. So this is where we start putting it together and start having an outline. So one thing I want to share with you guys, and this is after I've been trading for 10 years and I realized the mental errors you have in your trading year 1, year 2, year 3, don't ever go away. Like they will never, ever go away, right? They will always carry within your trading. So when I see people trying to say, well, I want to remove emotions, I want to remove this from my trading, I don't want to think like this, or I don't want to operate like this, I have to change this. And I'm like, there's certain things you can change, but within how you operate within your personal operating system, you can't really fully change that. But what you can do and what you should do, in my opinion, is you should create a system that prevents you from making these mental mistakes once you identified what they are. So I'm going to give you examples of things that I do and I have done that has helped me tremendously on avoiding making these mistakes again. And if I do make them, I'm able to catch them very quickly. So the way I've combated some of my mental errors is the first one, overconfidence. So I realized whenever I have a strong opening trade, if the market opens tomorrow at 9:30 or whatever time zone or time you may trade under, and when it opens and I have a good trade on the open, I am not allowed to increase my size, especially after a strong trade. At this current stage, I don't do that. I have told myself if I have a really big trade where I make 40, 50, 60,000, let's say on the open, my second trade cannot be more size. I cannot put on more size, because if I put on more size and I get super aggressive, that first trade confidence can and will carry you over to the second trade, and I will and can be blinded. So I have made that a rule for myself. I have made that a rule every single day I take on a trade. The next rule that I follow is I make sure I cannot have more than 3 losing trades. Now, if I do have 3 losing trades a day, which is okay, which is fine, which will happen and has happened. I'm not saying I'm trying to control that. I'm trying to limit myself to that, meaning once I hit 3 consistent losing trades, I am done for the day. The reason I've implemented that in my trading, I realized 2 to 3 trades, when I hit 2 to 3 losing trades, my confidence goes down. I get angry, I get upset, I try to make that money back. So from a mental point of view, it's like, okay, well, I'm already down $6,000. Let me lose another $2,000 and I'll be down $8,000, right? Because obviously when you lose a good amount of money, adding another 100 or another 1,000 or another 10,000, depending on what scale you're at, doesn't really, at the moment, impact you, because you're like, whatever. So I've implemented a rule where if I have 3 losing trades, I'm done for the day. I need to walk away. The next rule I've implemented is I cannot trade after a certain time period. So typically, if you guys have been following my journey on Twitter or Instagram, where I have the link down below, I don't like to trade after the first 2, maybe 3 hours max. I like to trade the open maybe an hour or 2 hours after the open. After that, I like to call it a day. Now, what I used to do early on in my trading career is I would randomly come back to my trading computer at 1 p.m., 2 p.m., just throughout the day. If I have nothing going on, I would just come back and I would just start watching the markets, right? And I'm like, I'm not going to take a trade. I'm just going to watch. Obviously, when we watch, we mentally create these opportunities in the market. Like, oh my God, this is going to go up. Let me take a quick trade. Let me take a quick trade here. Let me take a quick trade there. As I start taking these quick trades, the next thing you know, I'm down a couple of grand, and it just never really works out. So now I have a cutoff time that I will be trading from this time to that time. After that time, I am walking away and calling it a day. I have another rule that I've implemented that once I call it a day, I am not allowed to come back to trading. If I am mentally checked out and I'm like, I'm done, it's 11 a.m., 1 p.m., whatever time, and I'm checked out, I walk away. And the way I counter that is the moment I'm done trading, the first thing I do is I go journal. I journal my day, I recap my day, losing, winning, whatever the case is. I journal, look into my trades, look into my thought process, and I'm like, you know what? The session is closed. I don't care what is going on. I'm finished. The next rule that I had to help me avoid FOMO, right? Because in my early days, I've had so much FOMO that just had me wanting to take every single opportunity or every single trade that I thought is going to move in some direction. I just basically said, if it's not in my game plan, I am not taking the trade, right? If it's not in my morning game plan, I am not allowed to take the trade. Register that. Put that into your head. Guys, I'm going to share something very valuable with you right now, okay? When you are trading, you never want to make money that does not make sense to you. What I mean by that is if you make money by accident as a trader, let's say you don't have a stock or a name on your game plan and you randomly trade it and you make money, you've allowed a bad habit to enter your trading space. The moment you allow one bad habit to enter your trading space, it starts compounding into 2 bad habits, 3 bad habits, 4 bad habits, 5 bad habits, and next thing you know, you have a massive drawdown and you essentially blew your account. So you want to try to avoid these problems. You want to try to avoid taking trades that don't fit your game plan. You want to try to avoid trades that don't have an edge, that don't align with your playbook or don't align with your strategy or setup or whatever you may want to call it. Because once you avoid those and you start cultivating an environment for yourself that makes sense, that is healthy, and that forces you to only take trades that align within your game plan, you start building good habits, which will and do compound over time. I wish I knew a lot of these things early on in my trading career. I wish I worked on having plans to combat these. I wish I was more aware of realizing I'm gonna have these problems, because I didn't think I would. That's why I wanted to share this with you guys, knowing that you're gonna have tons of trading problems, tons of mental blind spots. Don't get discouraged by it. Instead, say, okay, I've identified my problem. I know what it is. I know when it happens. Now I'm gonna make a game plan to fix it. Then when the problem comes again, because it will, do the same repeated pattern, even on year 9, year 7, and so on. Like I said, the problems are going to keep popping up, but your job is to identify and fix. Identify and fix. And the biggest skill set of traders that I've seen that do really well is they're natural problem solvers, right? You have to be good at problem solving, and you have to be aware of yourself, aware of the problems that come into your trading, and then just essentially solve them. And the quicker you do that, the more efficient and effectively you do that, the more money you will essentially make as a trader. So with that being said, let me know what problems you guys have down below, from a mental point, any sort of blind spots. And thank you so much for watching, guys.